Yo, what's up, guys? Welcome back to This Just In. Thank you for joining me today. In this video, we're going to take a look at the Momo stock. This could be one of the most high value swing trade setups that we get an opportunity at all year. So I wanted to give you my thoughts as well as my Momo stock price prediction for the end of 2021. So let's jump right in. All right, guys, before we get started today, subscribe to the channel for me. Hit that little bell so you get notified every time I post. There's also a link down in the description to my Patreon account. Come over and join the family. We've got an amazing community. You'll get access to the private Discord where we talk stocks. You'll get links to 5 portfolios so you can see exactly what I invest into. And then anytime I buy or sell a stock up to the second I do it, I send out a notification so you can follow along. I also send out high value swing trade setups or anytime I map a chart or I've got a watch list, anything that can help us become better investors. I also spent today and yesterday recording short educational videos on fundamental analysis and technical analysis that I will be posting to the Patreon and Discord for members only. So if that's something you're interested in, come over and check it out. New investors, if you want to get some more education, learn our process, I think you'll get a lot of value out of it. So come check it out. Day One Squad, I love you guys so much. Thank you for your support. It means the world to me. But guys, let's get started. So guys, Momo stock, it's pretty insane right now. When I came across it, not only does it look amazing fundamentally, but it also looks amazing technically. So I wanted to go through and do like a Momo stock analysis, kind of break down all of the areas that I see as beneficial or pros, kind of look at some of the risks. That way I can give you my Momo stock price prediction for the end of 2021. So let's get started. Okay, so first thing we want to look at, guys. So this is the first website. For those of you guys that do not know anything about the Momo stock, they're a Chinese company and they are a social media video, platform, video sharing platform. They've got 2 different apps. The first one is Momo. This is like their, cornerstone app, their first app, their moneymaker. This is like the growth engine of the company. It isn't brand new. It's been out for a few years. The stock IPO'd back in like 2014. There has been some little bit of revenue decline on Momo in the last few years. And so the company made a very, strategic decision and they acquired this company right here, which is Tantan. Or Tauntaun, not quite sure how you say it. This is really what I'm excited about, guys. This company right here, it is losing money as of today, but it is growing at double-digit growth, and management expects that it is going to eventually exceed Momo and become the growth engine of the company. So you got to think, management saw the opportunity to acquire a company that's growing rapidly because they saw the decline in the, overall growth of the flagship app Momo, and they wanted to get ahead of the curve. So very exciting. Like I said, they are currently losing money. Not Momo. Tauntaun is currently losing money. But that could change within the next coming years. I did read something in their in their earnings report where they haven't really been doing a lot of marketing. They haven't been doing a lot of outreach. They've been focusing on giving this a overhaul, making the app better and providing a better user experience within the app. So again, Chinese dating app, it's like the Chinese version of Tinder. So definitely take a look at this when you have some time. Looks like a pretty decent app. I've never looked at it or installed it or anything, but check that out. This is what excites me because there is a lot of growth within this platform that could eventually, take them to the point where they've got Momo, even if it maintains, and then they've got Tauntaun that is exploding and growing faster than Momo, with that negative impact to their gross margins because of this company losing money, that end up, weaning down, increasing, getting profitable. It just boost the overall fundamentals of the company, for the long term. The other thing I will say about this, guys, is this only makes up a very small percentage of the Momo stock's overall revenue. So real quick, I want to kind of give you an overview. So looking at the Momo stock like overview of all the metrics, you can see here that the average 3-month volume, about 2.47 million shares. The 52-week price range is $12 and $21.15. We have a shares outstanding of 206.3 million, with a market cap of 3.11 billion. So not a large market cap, actually very small, and in my opinion, extremely undervalued. When we look at the PE ratio, look at that, PE ratio of 10.6. guys, this is a growth company. I mean, this is a tech stock, a social media platform. The average PE is like 15. When you look at a lot of the growth stocks we invest in, they don't even have a PE because they have negative earnings. So, maybe because the decline in growth, you could assign a more conservative PE ratio to it. But even if you were to just give it a 15 PE, I think it is certainly undervalued at 10. So I think there's a lot of upside there, guys. Price to sales ratio 1.38. Price to cash flow 6.7. And then look at these return on asset and return on equities. Very nice there, 6.46 and 14.52. With the gross profit margin in the trailing 12 months of 46%, very nice there. An EBIT margin of 16.22 and a net margin of 13.6. Again, guys, keep in mind, Tauntaun is currently losing money, so that is going to cut their overall margins on the bottom end. So the net margin, the EBIT margin, anything that has to do with net profit. Now, the revenue growth, 11.76 to the negative side. So they did have a decline in revenue growth over the last trailing 12 months, with a 2.27 billion in that trailing 12 months revenue. Guys, let's take a look at the Q1 earnings. So as you can see here, they did beat on EPS by 11 cents. The revenue did miss by 3.14 million, excuse me, but it was up 4.4% year over year. So they did a total revenue of 529.7 million for Q2 of 2021. Now, the monthly active users on the Momo application were 115.3 million in March, which there was a consensus of only 113.3 million. So they did beat consensus on their overall monthly active users compared to 108 million in March of 2020. So they grew about 7% year over year on their total monthly active users. One thing I was reading in their earnings transcript, guys, is one of the CEO was pretty much saying that despite seasonality, apparently Q1 and Q2 is real tough to grow monthly active users. They hit record monthly active users and they grew it at 7% year over year. So it is very nice to see that they are growing users despite seasonality and beating consensus like that with record monthly active users. Now the other thing is for the second quarter of 2021, the company expects total net revenues to be between 562 to 578 million versus a consensus of 562.35 million. So even on the low end, guys, the company is setting guidance for Q2 to be higher than consensus. That gives me a lot of confidence. Obviously, the company has confidence as well, raising that guidance, setting that guidance at the low end of analyst consensus. We talk about it all the time. If they can hit that, even on the low end and beat consensus, it will do very well. If they can get up there around that 578, where consensus is 562, the stock should do very well because of that. So, okay, now let's take a look at the income statement. Guys, look at this. I understand declining growth. Maybe the stock's been overlooked, but guys, there's times in marketplaces where, stocks just get overlooked. They get mispriced. The valuation goes way down. They were a growth company. Everybody was hyped about it at one point, and then it cuts in half because it just kind of goes under the rug. Maybe a couple things come out and there's huge overreactions. Look at this. December 2013, 3.1 million. It took them only 5 years to get to $1.36 billion in revenue annually. That is some massive growth there, guys. Then you take a look. You go 1.3, 1.9, 2.4, 2.3, and they're in their trailing 12 months, they're already at 2.27. So, guys, yes, there was a down year, right? But from, the last 5 years, that's growth there. So this is a growth company. I can't see having such a low PE multiple or any type of multiple, price to sales, price to cash flow. I see a much higher valuation multiple that should be assigned to this stock. When the market misprices stocks, that's when we love to buy, because eventually in time that, mispricing will kind of, find equilibrium and balance out, and we will take the opportunity there. Now let's take a look at the net income. So as you can see here again, back in 27 or 2012, they were down negative 3.8 million. But look at this in the last 5 years, 13.7 to 141 to 330 to 409 to 426 with the down year in 2020. So again, you have that up, that down 1 year. Who knows? Maybe the pandemic really hurt the app. Because people couldn't go out and go on dates. I don't know, but nonetheless, beautiful growth over the last 5, 6, 7 years on the top end and the bottom end. Now, next thing I want to look at, guys, this is what is very interesting to me, is the free cash flow. Free cash flow is everything. That is really one of the number one driving metrics when you're looking at fundamental analysis. For those of you guys that do not know, free cash flow is cash from operations right here on the cash flow statement, minus your capital expenditures. So if we take a look here, the last 5 years, I like to take 5 years, average it out, and then assign my multiple. So you can see here, 204.5 million in, what is that, 2015. And then you've got 410, 448.5, 7558, 453. So over the course of the 5 years, their average free cash flow, their 5-year average free cash flow is 454.36 million per year. Now, guys, I want to show you how undervalued this stock is. If we go back here and we take a look at the overview, you can see here the shares outstanding, 206.13 million shares. So if we take this, the 454.36 million, and we times that, even if we use a conservative multiple of 15, which, again, it's a tech company, it's a growth company, with what they've been doing on their income statement and their free cash flow growth, I don't see how you couldn't assign them a 20 free cash flow multiple. But let's just be conservative, and we'll use a 15 free cash flow. So you times your average 5-year free cash flow by 15 for your multiple. That gives you $6.8 billion for a desired market cap. So essentially, guys, the market cap is what? 3.11 billion. So the stock could literally double and still be considered fair value. So if we take this 6.81 billion, we divide it by the total number of shares outstanding, which is the 206.13 million. That gives us a price target of $33 at that 15 times free cash flow multiple. In my opinion, guys, I could see a 20 times, multiple. Now, with the declining revenue growth, with the risks associated with Momo, declining, and Tauntaun potentially not reaching its full growth potential, you could go be more conservative and use the 15. But even with the 15, guys, that's more than 100% upside from the current level. So let's take a look at the 15. If we use the 454 million for the average 5-year free cash flow, we times it by 20. That gives us a market cap of $9 billion. We again divide that by the shares outstanding of the 206.13 million shares, and that gives us a price target of $44 with a 20 times multiple on the average 5-year free cash flow. I think that's reasonable, guys. I think that is very, very doable, especially if they can continue the growth that they've been seeing. They can get Tauntaun to that point where it overtakes the growth of Momo and becomes the driving factor or the growth engine of the company. Guys, this Momo stock is looking extremely undervalued, not only from the fundamental aspect, but also the technical aspect. Now let me show you on the chart why this $44 price target is very obtainable. Okay, so we can see here, from back in 2014, we opened up at $13, ran up to a high point of 16 before getting rejected, and running down to, that $8, $9 range. Now, guys, it chopped around in this area for multiple years, getting rejected at this high from inception 4, 5, 6 different times. But once it broke this critical inflection point from inception, look at this, straight up, straight down. You break this area, you go straight to the top of the range at 20. So from 2016, when it broke that area, it ran over the course of the next 2 years to that high point at around $49, $50. Now, it has since then lost over 80% of its value in the last 2-3 years. But guys, this is what we look for. If we take this major discernible swing low, which is your all-time low to your all-time high, look at that. 88.6% retrace from the high to the low point. Those deep value, low risk areas that we look for. We come all the way down, we get that bullish divergence on both oscillators, and we get that momentum shifting structure, making those higher highs and higher lows. We have yet to make another higher high, but look, guys, you break that area, you run straight to the top of the range, it couldn't quite hold, you're coming back for that what? That confirmation low. So you get that reversal low, then you get that confirmation low. You are now, if you really want to get technical, you could also argue down here, even on the 4 hour, that you are getting a a small XABCD, bullish Gartley. If you use the wick, it's a little too deep on B, but nonetheless, you pretty much have a potential bullish Gartley, which what would that be? A partial decline with inside the range, come down, hit the pattern completion zone before running to the top, breaking out, back testing, and then running to the next range up there at 20. Guys, look at this on the weekly. What do we got here? A bullish cipher forming over the course of 5 years. That is a very, very strong structure, guys. It runs up, comes down, runs up, comes down, hits that pattern completion zone, giving us bullish divergence on both oscillators on the weekly, on the daily, on the 4-hour. When you get those coinciding variable, guys, you can't ignore that. That is so much strength. You get that reaction low. You're coming back for that confirmation low. Again, you break that area. You're running straight to the top of the range at 20. You break that. You get a spring back test. Guys, there's not much in between this $21 top here to your next range, which is at $37.91, which is not even necessarily the when you're using a aggressive price targeting on a big harmonic structure like this, it's really A and C, unless you want to use your extensions. But 42 and then 49 would be my price targets on aggressive pricing targets when you're looking at big harmonics like this. Guys, one thing I want to mention, you look at the daily here. So you get this big run up from the major discernible low to the all-time high. It took every ounce of selling pressure that the market could offer to push this stock down over 80%, but it could not push it as far as the discernible low. It caught and had seller exhaustion, made that momentum shifting structure, making higher lows, getting above the 200-day moving average. Guys, this is beautiful. This is exactly what we look for. If you take trades like this, 10 times out of 10, versus those, AMC all-time high continuation type stuff, you will have such better results. You'll cut your risk down tremendously. These coinciding variables on multiple different time frames, these big harmonics over the course of years, these big retracements down to critical levels of inflection. That's what we look for. That is what we look for. Guys, this is beautiful. The Chinese stocks are doing very well right now. The fundamentals look great. The technicals look great. Like I said, I think anything, 13 to 15 is a really good price. I would, you're at the top of the range now. I would wait to get confirmed that you are holding within the range. You spring out of the range, you back test the range, or you run to the top of the range, you back test before running and breaking again, back testing again before running to the top. Guys, I don't see this stock doing much other than running back and trying to go back and hit those aggressive price targets that we just looked at on the weekly at that 42 and 50. But guys, from its current levels, 15.11, I bought the stock at 15.47 with the half position. I do plan on adding more, depending on what happens, getting either my cost down a little bit, unless we get the spring, the back test of the confirmation, I will enter again there. Again, guys, you are getting more locally bullish divergence right back here, and then bullish convergence, which is impending price action continuation to the upside. So again, you get that momentum shift, you get that higher high, you get those higher lows. You really got to come up here and capture these prediscernible swing highs locally before making your advance. So that's it for today, guys. This is everything we look for. If this is stuff you want to learn how to find, you want to learn how to identify these patterns, find these high value swing trade setups, come over and join us at the Patreon. We've got an amazing community. It really can help you take your investing to the next level. This video is for entertainment purposes only, guys. I am not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. Like the video if you get any value out of it. And I'll see you guys in the next one. Peace.